I'd love to get your thoughts on Palantir, sort of the color behind the S1 yesterday, the business model, Karp himself. What do you think investors should know? What surprised you yesterday on that filing?
I don't think there was anything that necessarily surprised me. Palantir is an amazing company. It's been around for quite a while, as was noted earlier in your segment. I think what's most interesting to me is just the fact that it's taking the direct listing approach, which we're seeing more and more companies at least explore. I think there's a lot of innovation that happens in Silicon Valley, and now that same mindset is being applied to the process of realizing liquidity for investors. So it'll be interesting to watch this. You know, we've seen a couple of other high-profile direct listings with Spotify and Slack. So I think this, combined with the trend towards the special purpose acquisition companies, the SPACs, I mean, this is something that I think is an interesting trend, kind of trying to hack the process of getting a company listed.
Right. Yeah, no, believe me, it's gotten so many people's attention. The risk factors in the filing were really interesting, as I'm sure you are aware. They sort of point to, I won't call it reputational risk, but they included in the risk factors the degree to which they're shrouded in secrecy, some argue, the degree to which they might be reported on from time to time, given their client base. How significant is that to someone like you?
I think the way that I look at it is just to really focus in on the fundamentals. There's always going to be some extra baggage that comes along with certain types of companies, especially high-profile companies that are not very transparent. But I think the materials well outline the risks, and I think, it's prudent for an investor to take that into account. But again, the focus has to be on the fundamentals. I think in this case, just looking at the path to profitability, also thinking about the cash that's on the balance sheet to be able to support the company, kind of going back to the direct listing process. Most times when a company goes public through the normal IPO process, capital is raised as well because shares are sold. In this sense, in direct listings, capital typically isn't raised, but there's another hack, which is doing a financing prior to the direct listing to kind of have this hybrid approach of being able to raise some capital and then turn around to the direct listing. So I think those are some of the fundamentals to look at. Another interesting thing, which might be the reason that Palantir decided to stay private for so long, is just the fact that, there's a lot of integration and customization that often happens with their work. And so I think part of this was the ability to be able to provide more of a true software solution. So then the company could get valued much more like a software company as opposed to a services company.
Lo, Julia Borston here. You mentioned some of the hacks that the Palantir is doing in terms of the way it's going public. And I think it's interesting that two of your top holdings, SpaceX and SoFi, both expected to have eventual IPOs. I'm wondering how, as you look at what Palantir is doing in terms of their approach to going public, how do you think that's going to impact those two companies and some of the other major startups, major private companies, as they think about offering their shares?
Yeah, this is something that's been interesting to look at over the past 20 years or so, because you look at some of the companies that are in the technology space, like Google. Google was only private for about 5 years. So from the time it was founded until the time it reached the public markets, it was actually only 5 years, which is amazing in hindsight to look at how long these companies are deciding to stay private today. So I think there's a lot of things that factor in. Number one, companies are staying private longer because they're able to realize their dream while not being in the eye of the public markets and under the scrutiny of all the filings that are required, and trying to manage to the expectations of analysts. So that's a positive in that we're seeing these companies come public in a much stronger financial position, the ability to have a solid customer base, and to be able to kind of chart their own path moving forward. So I think that a lot of the companies are exploring this as an option. I think there's also a lot of regulatory process that's required to go a traditional IPO, whereas it's a little lighter with a direct listing. The technology already exists. Obviously, there's also the talk about the pop on an IPO and whether or not that is money being left on the table. Is it the case that when the IPOs are priced by the bankers, is this pricing actually reflective of the demand that exists in the market? And the company doesn't really realize any of that additional IPO pop. So I think that's another consideration.